Right, morning all. Welcome back to Morning Kappa. Aiman here. Happy Friday. Okay, so if you look at the S&P 500, well, it rallied on yesterday, around 0.8%, as Micron Technology surged around 11% after delivering a good set of results and raising its guidance. Um, which also revived the AI trade and lifted peers like Nvidia near to 2% yesterday. So sentiment was further boosted by jobless claims falling below estimates, which is the recession fears, which sparked on Tuesdays by the employment data, and also confirmed that the labor market remains stable. FedEx reported strong earnings after the bell yesterday, beating estimates and raising guidance, setting the stage for continued momentum in the industrial sector, I would say today. Okay, so yeah, if you look at the China market, well, it traded almost sideways yesterday or even recently, right? If you look at the bigger picture. So I think yesterday, the tech sector took a breather. Sentiment was dampened by the overnight sell-off in the US. Chip stocks also, which prompted a profit taking in yesterday's high flyers, right? However, the downside was cushioned by positive corporate news, which Momenta announced a strategic partnership with Grab, signaling that the Chinese tech firms are successfully expanding. So yeah, I think for now, resistance remains back at 15,500, together with 16,100 level, and support remains firm at 14,700, and psychological support or the second support was back at 14,000 level. Right. Moving on to the WTI crude oil price futures, where it hedged lower yesterday to close at 56 $56 level, supported by the US naval blockade on the Venezuela, which kept the geopolitical floor under prices by threatening the barrel of daily exports. So, however, I think upside was kept also by the gasoline graduality. Traders after the Wednesday's data showed a massive barrel build in stock, signaling that the end user demand is weak to sustain a major rally. So at this juncture, we are eyeing for the $55 support level, together with the $53 support level for the immediate, I would say immediate movement, and we keep our negative trading bias unchanged. Okay, so if you look at the Malaysia market, the KLCI, well, it rebounded yesterday to close at 1646.90, as investors rotated out of the I would say technology into the defensive heavyweight, like some of stocks, Nestle, right? Even even the glove, yes, right here. Um, some of the plantation stocks. Despite the tech-led sell-off yesterday in US, the local market showed resilience due to aggressive, I would say aggressive year-end window dressing and strong domestic economic data, which kept the index to uh, high. So now expect the index to test the psychological level around 1650, as it is inching closer towards that level, as window dressing intensifies or strengthening ahead of the weekend, right? Also, however, volatility I would say volatility will persist or continue in the tech sector until US market to stabilize. So, and also for FKLI traders, remain our bullish stance after the index trying to pop above this 1650 resistance yesterday. Also can see here, in terms of sector performance, consumer are one of the attractive sector. Yesterday, gained over 1%, 1.14% as compared to the other sectors. Right, so this is our watch list, and for our Malaysia trading stocks, today we got LHI or Leong Hub International, one of the key consumer stocks as well. So yeah, the stock is on its pending breakout formation at the 72 cent level on a strong volume. So with that, we expect the momentum to remain bullish and stock able to climb further to test the next resistance at 75 cent level. Followed by the second resistance at 78 cent level. And if the stock to clear or to reach lower below this 69 support 69 cent support level, this could shift to a bearish structure. Also next we have Life Water. So the stocks is experiencing a breakout yesterday above this ringgit at 45 cent level. So if the stock remain bullish, we expect that the price to hit or to test the 1 ringgit and 55 cent in coming session. Second resistance is at 1 ringgit and 65. Keep an eye at the support level of 1 ringgit and 35. If there's any attempt of reversal trying to reverse the trend, right? Also, lastly for the FCPOL, it edged a little bit higher yesterday, closing at 3981, tracking gains in the rival oil peers, while while a weaker ringgit made Malaysia palm oil slightly more attractive to foreign buyers. However, the slight rally, lack of strong conviction as traders remain cautious due to the poor fundamentals, right? Again, bear in mind that export for the first half of the December plunge, acting as a firm ceiling on the prices despite growing concern over flood in some of the state in Malaysia. Right, so yeah, I'll stop here and pass the floor to Adam. Thanks everyone and happy to see you guys next week. Happy Friday.
Okay, good morning everyone. So today we have firstly a company update on Gamuda, which yesterday they announced two contracts worth 8 billion in total. One was for the Commodities Hill Wind Farm in Australia worth about 700 million ringgit, and another project which is for the Sydney Metro West Stations package, which was worth about 7.3 billion ringgit. Recall that even on Wednesday, they also announced another project which was for the Mariners Link Stage 1, which was about 1 billion plus. So, you know, they basically secured 3 projects within a span of just 2 days. And this brings their outstanding order book level to about 46 billion ringgit, exceeding their initial targeted range of 40 to 45 billion ringgit by end of calendar year 2025. So, so basically, it's a positive for Gamuda, given that slightly exceeded their initial order book targeted range. And in terms of earnings, we make no changes, given that the year-to-date win so far now stands at about 13 billion ringgit versus our 20 billion ringgit job replenishment target for FY26. Therefore, we maintain our target price at 7 ringgit, which ascribes an 8% ESG premium. So that's about it for Gamuda. So moving on to Binastra. Binastra announced its 9-month FY26 results, which was at about 91 million ringgit of core profit, which was about 51% year-on-year higher, driven by ongoing projects along with the contribution of its subsidiary called Alflansen, which started to contribute this quarter. And even on a quarterly basis for the third quarter of FY26, earnings were at about 38 or 39 million ringgit, which was at a quarterly record high. Year-to-date wins now stand at about 2.2 billion ringgit versus our 4 billion ringgit job replacement assumption for FY26. Binastra's financial year end is at January, and we believe that the remaining 1.8 billion that Binastra needs to get in order to reach our 4 billion ringgit win target may mainly come from Johor projects, particularly clients such as Maxim Global and Exim. So given that results were in line with our expectations, we make no changes to our earnings estimates, maintained by with an unchanged target price of 2 ringgit and 69 cents. Any rating catalyst for Binastra would be if it were to continue to secure more renewable energy related projects such as the LSS5. So that's all from me. I'll pass on the floor to Akef. Thank you.
Okay, hi, good morning, everyone. I'll be presenting today on behalf of David. So today I'll be reviewing AEON Credit Service 9 months FY26 results review. We maintain our buy call with a TP of 6 ringgit 70 cent and an upside of about 21 cent, and FY26 forward yield of around 5%. So AEON Credit 9 months FY26 results were broadly in line with expectations, supported by a decline in credit costs during the quarter, which drove a strong sequential rebound in earnings. So importantly, collection ratios improve both quarter on quarter and year on year. So if this trend continues, it should translate into a more favorable credit cost outlook ahead. At the current valuation of 0.87 FY27, 0.87 times of FY27 forward price to book value, AEON Credit Service is trading near its 10-year low, which we view as unjustified given its a consistent strong ROE of over 10%. So moving on to the third quarter FY26 results. Results were broadly in line. AEON reported a net profit of 92 million, representing about 27% quarter-on-quarter growth and 48% of year-on-year growth. So this will bring 9 months FY26 PATAMI to about 242 million, which accounts of about 67 to 70% of both of our consensus and full year forecast. So overall, the results are broadly within expectation, and we expect the remaining gap to narrow further in fourth quarter FY26. Asset quality indicators are showing signs of stabilization together with management ongoing initiative to strengthen collections. So this would probably support a further easing in the credit costs going forward. So the main driver of the strong sequential earnings improvement was the decline in credit costs of 4.2% down from 5.1% in second quarter FY26. So asset quality remains stable with NPL ratio of 2.5% flat quarter on quarter, but slightly 6% back points year on year. Excluding write-off, gross provision charges a decline of about 70% quarter on quarter, which helped bring overall credit costs are lower. Write-off was stable at 199 million. Recoveries eased slightly to 50 million compared to 55 million in previous quarter. Loan cost coverage ratio remains stable at 228% and increased marginally to 20 million, though year to date associate losses of 54 million remain below full year guidance of about 80 to 90 million. Turning to the growth metric, AEON Credit Service continues to deliver solid balance sheet expansion. Gross financing receivable grew 13% year on year, with a quarter-on-quarter growth of 2%. On annualized basis, it would be the growth of about 12.5% exceeded management target of 10 to 12%. This was driven primarily by strong momentum in personal financing, which grew 70% year on year, and credit cards, which expanded 20% year on year. So lastly, on our earnings valuation, we maintain our earnings forecast and keep our target price at 6.70, derived by using a GCM based price to book value of about 1.05 times, which is around one standard deviation below the historical mean. And yeah, that's all from me today. I'll end the floor today, and have a great day, everyone.